This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, September 16th, 2015. Euro dollar. So euro rallies continue to be very well capped into the 114 area, ahead of 114 and certainly ahead of 115, with the market looking like it wants to put in a small lower top at 1373 ahead of a fresh downside continuation. At this point, next key support comes in the form of the short-term support at 110.87, going back to that low that we saw on the 3rd of September. Below there, we should see an acceleration to the downside back towards more critical support at 108.09 in the form of that 20th of July low. Really, only a close back above 115 would compromise the bearish outlook or the immediate bearish outlook for euro dollar. Sterling dollar. So rallies here have been very well capped ahead of 155, with the market looking like it wants to put in a lower top at 154.76 ahead of a bearish continuation and fresh downside back below recent support that we saw, which came in around the 151.65 area, and below which would expose 50.89, that low that we saw going back to the 4th of May. At this point, only back above 155 would compromise the bearish outlook. Dollar yen. So dollar yen continues to show signs of consolidation, but a medium-term lower top at 121.74 ahead of a bearish continuation back below or recent for a retest of that recent low that we saw, that spike low going back to the 24th of August at 116.12. At this point, only back above 121.74 would compromise the bearish outlook. Euro Swiss. So Euro Swiss continues to show signs of impressive recovery, with the market trading back above 110 in recent trade and now looking like it wants to make a fresh measured move upside extension towards 112. At this point, any setbacks should continue to be very well supported, with only a breakback below 107.14 to compromise the bullish outlook. Aussie dollar. So Aussie dollar has seen a bit of a rebound in recent trade, though the rebound was to be expected given the intense oversold nature of this market and intense downtrend that we've seen to fresh multi-year lows. But ultimately, the downtrend remains firmly intact, and a lower top is now sought out ahead of a bearish continuation back down towards next key support in the form of a measured move downside objective at 68.30 further down. Only back above 74.40 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD remains highly constructive, with the market now locked in a consolidation over the past several sessions to allow for some overbought technical studies to unwind. At this point, a break back above the recent highs that we saw, 11-year highs at 33.54, will expose 135 further up. Only back below 128.60 would compromise the bullish outlook for dollar CAD. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, and the market is now looking for the next lower top ahead of a bearish continuation below that recent spike low that we saw, a multi-year low going back to the 24th of August at 61.30. At this point, only a breakback above 67.40 would compromise the bearish outlook. SPX 500. So the S&P 500 has been consolidating, with consolidation getting tighter and tighter over the past several sessions, but the market ultimately is looking to put in a lower top around the 2000 level in favor of the next downside extension back towards recent lows that we saw in the 1830 area, and lows going back to December to October 15th of 2014 at the 1819 area. Really, only a close back above 2000 would compromise the bearish outlook. Gold. So gold has been in the process of consolidating just off recent lows that we saw, multi-year lows at 1073, and the market is now trying to hold above 1100 in favor of the next upside extension in the higher low back above 1170 and towards 1233 further up. Really, only a close below 1100 would compromise the recovery outlook and put the pressure back on the downside for a retest of those recent 1073 multi-year lows.